Welcome back. Standard Bank, South Africa's #2 lender by market value, has reported an 11% rise in half-year profit. This comes as a rebound in commodity prices boosted demand for loans from its clients in the oil and mining industry. Headline earnings per share totals 746.4 cents in the 6 months to June, compared with 671.2 cents a year earlier. In the meantime, Gem Diamonds is reporting a 14% drop in half-year revenue, hurt by lower production and a decline in average diamond prices. The company, which mines diamonds from the Letseng mine in Lesotho, has also received an acquisition offer for its mine in Botswana. Revenue fell to $93 million for the 6 months to June 30 from $109 million a year earlier. Oil futures are struggling for direction a day after heavy selling that came on the back of data showing U.S. oil production has jumped to an over 2-year high. The seesaw action comes after crude and Brent tumbled 1.6% and 1% respectively on Wednesday, as investors focused more on the big jump in average daily U.S. oil production and not the bigger than expected drop in crude inventories there. Well, to talk more about developments in the oil market is a research analyst at the financial derivatives company, Khalid Oluyade. Many thanks for coming, Khalid.
Thank you for having me.
Yeah, so we've seen the volatility of oil prices in the last few weeks. What is responsible for this trend?
Okay, oil as a commodity is actually very volatile. That's the nature of that commodity, right? And this is because of sensitivity of that commodity to news and information, right? As of today, oil is at our price is at 50.20. That's just a moment before I came in here, this is a different figure from what we had last week. Last week it hovered around 51 to 52 dollar per barrel, right? So because of a number of events that's occurred as in recent times, that's what led to this change in price, or let's say volatility, right? One of the events I would say is quite critical to what we have now is the increase in U.S. shale oil production. Right, this has been on an upward trend over a number of months now, and aside that is the slowdown in Chinese economic activity, right, which also impacts price. And lastly, it will be a number of other events that are playing in this space, and which I can say is, for example, yesterday they mentioned that Libya is actually opening some production units, so this is going to increase supply. So all these dynamics is what plays and affects price, and it kind of brings about volatility in oil price. So
all these dynamics, like you said, are they sustainable, or are we likely to see some stability in the short term?
We see in recent time we've been hearing about supply quotas from OPEC. Right, but what we tend to see is that not all the countries that are part of OPEC are actually complying to this. So if we have a case where all countries are complying, maybe it can be sustainable in short term, right? But for example, the likes of Iraq, Iran, and Ecuador, they're not complying as they should, right? So these are factors that can affect price. In the long term, we're seeing that technology is evolving. We're hearing about electric cars, alternative energy, biofuel, and the like. So all price might not be able to get to where it used to be. Right, so these are key pointers that economists should pay attention to going forward.
Now, Khalid, let's bring things much closer to us here in Nigeria. Is this likely to have any impact on the federal government's economic recovery agenda?
Yes, it definitely will. Today, oil price is trading above $50 per barrel. That's good news for Nigeria. Though we have some limitation, we have a production cap of 1.8 million barrels per day. But that notwithstanding doesn't affect the revenue we're going to get at this short or immediate time. Part of what we can see is that government revenue has increased substantially. For example, let's pick FAC. Right, FAC allocation as at last month was significantly higher than what we had that's a month before that time, right? And these are indications that what is playing out in the oil market is actually impacting our economy. And when there's more money for government, then there's more money to settle debt. There's more money in the hands of consumers, which depicts that consumer disposable income has gone up. Then there's more money to spend, When there's more money to spend, you're encouraging the producers to produce more. Then ultimately, the shift in the supply and demand profile impacts the economy, and we can see, greater things ahead.
Now, with all these developments, the commodities market, is it going to be in any way affected?
Yeah, definitely. Like I said, increased government spending impacts what consumers have to spend. When they settle debts, when they pay salaries, arrears, and the number of other things, it impacts how much they have to spend. And when they spend, it encourages the suppliers to produce more. And when they produce more, they can leverage on economies of scale, which can beat down the price. And ultimately, we can see a decline, or let's say a stable price, or I would say a downward trend in commodities price. So it's going to impact it positively. Okay.
So what's your outlook for oil prices in the coming days?
Short term, if nothing major happens, right, maybe we're still going to go with this flow between the low 50s. But the concern really is what we are seeing in U.S., right, the increasing shale oil production, right, and there's nothing anybody can do about that because U.S. is not a part of the OPEC community, right. So that's I would say the short-term challenge or threat we have. But on the long term, it's something that is a global, I would say, global concern, because we are seeing shift from oil-based products to products that are not oil-based. Like I said, electric cars. When we have that, it means we're going to have lesser dependence on oil, and that means prices might not be able to get to as high as it used to be a while ago.
Research analyst at the FDC, Khalid Oliadi, thanks for coming on Business Incorporated.
Thank you very much.
Moving on now, Namibia's central bank has cut its benchmark lending rate by 25 basis points to 6.75%. The Apex Bank explains that it took the action based on the need to support economic growth and maintain the one-to-one link between the Namibian dollar and the South African rand. Namibia's economy slipped into recession in the first quarter of 2017, shrinking by 2.7% in the quarter, following a 1.4% contraction in the last quarter of 2016. And the Democratic Republic of Congo's central bank expects inflation to stand at 48% by the end of this year. Well, that's up from an earlier estimate of around 44.6% and nearly double last year's rate of 25%. Persistently low commodity prices and high government deficits have caused the franc currency in Africa's top copper producer to shed more than 30% of its value in the past year and driven accelerating inflation. And that's our program today. Thank you for watching. I am Bisi Adebayo.